Welcome to the Daily Brief. This is being prepared Tuesday, September 6th, where we'll go over the highlights of the market's action on Tuesday and then see how things look for Wednesday, September 7th. And before I start, I did record a full-length video, but as I was getting ready to record this, I noticed that the microphone setting was wrong. So the sound on that video may not be all that good. I apologize for that. I try to check that every time, but apparently I missed it this time. So let's go back and talk about the highlights. On Tuesday, right at the open, we did have a lower open. And on Monday, during the holiday, the S&P futures were positive. Not by a lot, but they did stay positive. And then even in the overnight session going into Tuesday, we were up pretty strong. And then they started to trail off a bit as we got closer to the open. When we did open for the session on Tuesday, we did have a lower open. It looked like we were going to go a little bit higher, but then we shot lower. We didn't even get down to S1 at 38.81, so we didn't hit that level. As the day went on, buying came back in. We actually went positive for a while, but then it didn't really see any follow through. So prices went negative again and stayed that way for the rest of the day. We closed a bit off of the low, and we ended up being down 0.41%. Volume was above average, so that's kind of interesting, kind of a different change from what we've been seeing. The technicals are still overall negative. We are still holding with some support on that trend line. We're also becoming oversold on a short-term basis and starting to become a little bit more oversold on the intermediate term. But inflation, interest rates, and growth concerns, that's what the market's all freaked out about right now. And then we have the geopolitical concerns that could come to the forefront. Earnings as they're released, the debate going back and forth of what is a recession and are we in one, and then any Fed speak that may come out. So what are some comments? The futures were positive on Monday, and then overnight, Europe was very weak on Monday because they didn't have a chance to react to that Nord Stream 1 pipeline news that came out. So they tanked on Monday, but then on Tuesday, they rebounded a bit, especially Germany. That's the one that I was watching the most. So that gave a little bit of support to the futures. Also, the European Central Bank will be meeting on Thursday to talk about their interest rates. And the forecasts are anywhere from 0.5% to 0.75% that they'll raise rates. Now, remember last time they went a lot higher than the market expected, and that really spooked things a bit. So we just want to keep an eye on that. The S&P did test 3,900 and found support, at least so far. We have to keep asking this question. Are we going to go down back to the June lows? And what's going to happen when we get down there? Are we going to bounce from that level? Are we just going to keep going below that? Everyone's willing to give you their opinion. We need to see what's really happening by looking at the charts. This trend line that I talked about over the last couple of videos, it's trying to hold up, at least so far. We did drop a little bit below that in Tuesday's session, but then we closed right about on it, depending on if I drew it the right way. Our sector rotation, our positive setups, our positive scenarios, blah, 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 they're all on hold right now. And some of them might even generate new signals if we keep dropping. The 10 to the 2 and the 10 to the 5, those yield curves remain inverted. And we have interest rates, the dollar, and oil. Oil's starting to go more in the same direction as stocks right now, but interest rates and the dollar are going in opposite directions. Sentiment is getting a little bit more fearful and not nearly extreme. We had the ISM non-manufacturing index. It actually increased a little stronger, in fact, quite a bit stronger than what they expected. It came in at 56.9. They expected it to be at 55.2. That kind of throws this has inflation topped out coming down scenario, puts it on hold for a while. We do have a negative trend that is getting stronger. The ADX and the moving average are right on top of each other right now. So it's not really turning up, but it is still above 20. And because we had a down day, that means our bias is negative and our momentum over the last number of days has also been negative. So what's our outlook? The technicals are negative and they are short-term oversold. Many of our indicators are showing that. We have the weekly MBA mortgage applications index coming out, followed by trade balance and the Fed beige book. None of these are real big market movers. So the market's going to do what it's going to do, or things may really slow down since there aren't any real catalysts as far as economic reports to pull from. But anything can happen at any time. The geopolitical events, a lot of these I've already mentioned. They are having some more lockdowns again in China, which could feed over into the supply chain issues and pretty much the same scenarios that we've been dealing with. You can see this list here, which is also on the next slide. We kind of have to go with the negative scenario because of all the headwinds that are hitting the markets right now. And our technicals are negative, but so far the trend line is holding up and we are short-term oversold with a little bit of an intermediate oversold condition. We can't really go with the up scenario because the technicals are negative. And will we find support at that trend line, or will it ultimately fail? Our scenarios, our rotation, our setups, those are all on hold right now. Our technicals are pretty much negative. So if you try to fight against this downward trend, it's like getting in front of a locomotive or trying to catch a falling knife. It can be very dangerous. And then we're not really going sideways right now because the ADX is above 20 and the red line's on top, which means that we are negative. So our conclusion is we are negative overall, short-term negative and oversold, intermediate term negative and becoming oversold with some of our indicators. Long-term, we continue to be negative. So thank you. Please feel free to check out the full length daily update video if you want to look at the charts and see my analysis and commentary. Have a really good day, and I'll at least be preparing the daily brief after Wednesday's session. If we have big movements in the market, then I'll do a full-blown video. If not, I may just stick with the daily brief video.